Hello, guys. So let us start our session. So today we are here to a part of the question paper marathon by Elance. So today, hope you all are in the final preparations of our next coming exams. So today we are going to do some questions from the topics IHT and VAT, inheritance tax and VAT. These are the two portions we are going to discuss today. And today we will discuss a few questions from these relevant topics. And along with the question practice, I'll explain uh, some topics regarding what are the contents or tax rules related with that questions are. That will I'll explain. Okay, and you can use this time to clarify your doubts and concerns related with the IHT and what topics. Okay, so which today we are going to discuss the TX paper. Okay, TX paper today we are going to discuss. Okay. Okay, is there any students are appearing for any other papers in this session? Okay, fine. Okay, guys, give me a moment. Okay, so first of all, we are going to discuss the topic VAT, value added tax. Okay, so uh, do you have any suggestion, any question suggestion from our question practice kit from Kaplan or BPP? Because you are in the final preparations, so you are used to solve lots of questions in the kits. And if you are facing any difficulties in section C or B questions in the kit, you can suggest that. We will discuss that question in the live session. Otherwise, randomly we'll select a question and we'll explain that question. And along with the question practice, we'll discuss the topics. Okay, do you have any suggestions? No. Okay, hope you don't have any suggestions. So let us select a few questions randomly from our material. Okay, so I think today, yes. 308 night. Okay, of course. Today we will discuss the question 308 night limited. And that's a section B question. And before that, before we are going to the section B, we'll answer two questions in the section C. Okay. So because in the examination, in your TX paper examination, the most probable chance of the VAT will be tested in the section B. That is not a confirmed thing. It is a probability. Okay, the most probably VAT will be tested in the section B. Okay, so even if it is tested in the section B, we should practice the questions from the section C, because the section C, if you solve the section C part first initially, so you can get an idea. You will get an overall picture about the syllabus. Okay, picture about the contents. Okay, that's why today we are going to do section C questions initially. Okay, so first we are going to solve question number 310. Okay, Garfield. Okay, I think might be you already done with these some of these questions. Okay, and along with this question practice, we'll explaining the topics. Okay, so that's why I'm selecting the Garfield question first, because lots of calculation things are coming under this 310th question. Okay, so first we are going to do this question, Garfield, 310. Okay, so it is the question, Garfield. And actually, if the VAT question tested in the section C, you can expect at least a 50 percentage of the question will be tested in the calculation part. Okay. So here we have the question, and when you got the question, you should read the requirement first. These all are the basic things. I think you are all familiar with this. When you are practicing the question or attending the exam, first you should read the requirement first. Okay, so look at the first requirement of this question. Calculate the amount of VAT payable by Garfield for the quarter ended 31st March 23. So here we are required to find out the VAT payable. Okay, we know how to find out the VAT payable. Okay, we know what is output tax and input tax. Okay, the output tax, okay, the output tax, which means it is the amount we are collected from our customers as tax, okay, on the sale of service or goods. Okay, at the time of selling the services or goods, we will collect some amount as VAT from our customers, and that VAT element is called output VAT. And the collected output VAT we should pay to HMRC. We are liable to pay that amount to HMRC. Okay, so this output VAT, it is the amount collected from our customers. Okay, and the input VAT, which means it is the amount we are paid at the time of purchasing any goods or services. Okay, so this input VAT, which means it is the tax we had already paid at the time of purchasing any goods or services. Okay, so it is already paid amount. So in the computation of VAT, we should pay the collected output VAT to HMRC, and we can deduct the amount of input VAT paid to our suppliers. The net amount we should pay to HMRC. This net amount is paid VAT payable. Okay, so it is a basic computation of VAT. Okay, so let us come to our scenario and what are the output VAT here, and let us check what are the input VAT as here. Okay, so let us go through the scenario. Garfield has been registered for VAT since 1st April 2016. So here there's a term, Garfield has been registered for VAT. Okay, the company is registered for VAT. So if a VAT registered trader is only liable to, he's only able to collect the tax from the customers. Okay, we already mentioned that the output VAT is the amount collected from the customers at the time of selling any goods or services. So only VAT registered traders, okay, only VAT registered traders can collect the output VAT from the customers. Okay, and only VAT registered traders can reclaim the input VAT also. Okay, so all these computations are applicable on VAT registered traders. Okay, so how a trader can register for VAT? How a trader can register? Okay, there are two types of VAT registrations are there. Okay, when we are talking about the VAT registration, there are two types of VAT registration. The first one is voluntary registration. Okay, voluntary registration is there, and compulsory registration is there. The voluntary registration, which means any traders can register for VAT voluntarily without any restrictions. Okay, for the voluntary registration, there is no restrictions. Okay, there is no any minimum amount of turnover or maximum amount of turnover, that kind of any restrictions over there for the voluntary registration. Okay, and when it comes to the compulsory registration, there are some criterias. Okay, guys, 1 minute. Okay, guys. So here, the voluntary registration, which means anybody can register for the VAT without any restrictions. And when it comes to the compulsory registration, there are some criterias. Okay, that is, some traders should register for VAT without any fail. Okay, and the condition for the compulsory registration, if a trader's taxable supply, if a trader's taxable supply in last 12 months exceeds 85,000, he should liable to register for the VAT. Okay, so here I just mentioned the taxable supply in last 12 months. What is taxable supply? There are three types of supplies. The products, the goods and services in the UK categorized into three. Okay, standard rated supply is there, zero rated, and exempt supplies. Okay, these are the three types of supplies in the UK. And in the standard rated supply, based on the nature of the products, we will categorize the supplies into these three groups. Okay, so we don't need to learn which kind of products coming under the standard rated, which products considered under the zero rated. That kind of knowledge we don't need in the TX paper. Okay, so we only need to know these three types of supplies are in the UK. Okay, so the standard rated supply, which means if we are, the majority of the products and services in the UK are coming under the standard rated supply. Okay, if I'm dealing with the standard rated supply, if I'm selling any products under the standard rated supply, I can collect the output VAT from my customers. Okay, I'll collect the tax from my customers, and if I'm incurred any input VAT related to make the standard rated supply, I can deduct that. The net amount I'll pay to HMRC. Okay, this thing we already mentioned. We already discussed that. And when it comes to the zero rated supply, under the zero rated supply, we cannot collect the output VAT from our customers. Okay, for example, in the UK, medicines, okay, it's an example. Medicines are coming under the medicines, medical equipments, all these things are coming under the zero rated supply. Okay, so for example, if I'm a medicine seller in the UK, I can sell this medicine to my customers, but I cannot collect the output VAT. Okay, because medicines are coming under the zero rated supply. Okay, under the zero rated supply, we cannot collect the input VAT. No, sorry, output VAT. We cannot collect the output VAT from our customers. Okay, and if any products, if there are any input VAT already incurred to make that zero rated supply, I can reclaim that input VAT from HMRC. Okay, so here I don't, under the zero rated supply, I cannot collect the output VAT from my customers. So I don't have any output VAT. So I don't need to pay any output VAT to HMRC. And if there's any input VAT already incurred for making this zero rated supply, I can reclaim that input VAT from the HMRC. So I'll get refund from HMRC under the zero rated supply. Okay. And under the exempt supply, also, we don't have any output VAT. Okay. Under the zero rated supply and exempt rated supply, we don't have, we cannot collect the VAT from our customers. Okay. If I'm selling any exempt product to my customers, I cannot collect the tax from my customers. Okay. So there is no any output VAT in the exempt supply also. And if there's any input VAT already incurred to making this exempt supply, I cannot reclaim that also. Okay, so under the exempt supply, there is no output VAT. I cannot collect the output VAT from my customers. And if there's any input VAT is already incurred, I cannot reclaim that also. Okay, so under the exempt supply, there is no input VAT and there is no output VAT. Okay, so these are the three types of supplies in the UK. And this standard rated and zero rated supply, these two supplies are together, we are calling taxable supply. Okay, so we just started with the registration. Okay, under the compulsory registration, we just mentioned the condition. If a taxpayer's taxable supply in the last 12 months exceeds £85,000, he'll compulsorily register for the VAT without any fails. Okay, and the taxable supply, which means standard rated and zero rated supplies are together called taxable supply. Okay, so it is a condition for compulsory registration. Okay, last 12 months taxable supply exceeds 85,000, a trader should register for VAT. Okay, so only VAT registered traders need to pay output VAT in the UK, and they can also reclaim the input VAT. Okay. Okay, so let us come to our scenario again. Okay, so in between this scenario, we'll explain the whole things. Okay, related with everything, every related topics, we'll explain. Okay, while doing this question. Okay, so here Garfield has been registered for VAT since 1st April 2016. Okay, so Garfield is already registered with the VAT. So Garfield able to collect the tax from the customers, and the output VAT he is liable to pay to HMRC, and the company can also reclaim the input VAT also. Okay. Garfield makes taxable supplies in excess of the VAT registration threshold each year. So every year, Garfield making more than 85,000 supply every tax year. Okay. Garfield previously completed his VAT returns himself. But for the quarter ended 31st March 2023, there are some items for which he is unsure of the correct VAT treatment. So this Garfield is personally doing every VAT related things. He's submitting the VAT return to HMRC. So in this quarter ended 31st March 23, he has some confusions related with some things. Okay, so we should clarify that confusions to him. Okay, that is a requirement. So here Garfield's partly completed VAT computations for the quarter ended 31st March 23 is shown below. All of the completed sections of the computation are correct. Okay, so here it is an incomplete thing, and some things are recorded here. The recorded things are correct. There is no mistakes in this recorded things. Okay, so here the first thing, standard rated sales. He had made some standard rated sales, and the output VAT related with the standard rated sales is 22,500. Okay, so let us make this computation into our answer. Output VAT on the standard rated sales is 22,500. 22,500. It is already given in the question. And the next one is discounted sales. And thus they are mentioned something related with the discounted sales under the note 1. Let us go through the note 1. On 10th of February 2023, a sales invoice for 4,300 was issued by Garfield in respect of a standard rated supply. To encourage this previously late paying customers to pay promptly, Garfield offered a 10% discount for payment within 14 days of the date of the sales invoice. The customer paid within 14-day period. So here he's made a sale on discount. Okay, so uh, we'll compute output VAT and also the input VAT on the basis of discounted price. Okay, here actually he's made the sales for 4,300 pounds. And to make that customers paying promptly, he make a condition on the payment. Okay, he make this 4,300 sales on credit, and he made a condition: if the payment of this 4,300 made within 14 days from the date of invoice, that customer will get 10% discount. The customer paid that amount within 14 days, so the customer will get 10% discount. So actually the sale is not for 4,300. Okay, he give the invoice for 4,300. After that, 10% discount he's allowed. Okay, so we should find out what is his selling price. Then we can find out the output VAT on the discounted price. Okay, so the selling price will be, we can compute simply like this: 4,300 is the actual invoice amount, and the customer is getting 10% discount. So the customer is only paying 90% of the 4,300. Okay, he's getting a 10% discount. So we only need to find out the output VAT on the 90% of the selling price. Okay, so 20% is the standard rate in the UK of VAT. Okay, the standard rate of VAT is 20% in the UK. And we should know, prior to finding out the output VAT and input VAT, is it a VAT inclusive amount or VAT exclusive amount? Okay, so the output VAT, the VAT computation of VAT inclusive amount and exclusive amount is little bit different. Okay, for example, in the question, if you are given with, okay, I'll explain the thing, then we'll find out the answer. For example, in the question, they are mentioned, a trader made a sale with a selling price of 20,000. Okay, if it is mentioned, this 20,000 is exclusive of VAT. If this 20,000 is VAT exclusive amount, we can find out the VAT element by multiplying 20,000 into 20 by 100. Okay, easily we can find out the 20% of the sale. That will be the VAT element. Okay, so if the same sale mentioned as VAT inclusive amount, if it is a VAT inclusive amount, we'll find out the VAT element by multiplying 20,000 into 20 by 120. Okay, otherwise, instead of using 20 by 120, we can use 1 by 6 also. Okay, both are same. Okay, 20 by 120 or 1 by 6, both are same. Okay, so we can use 1 by 6 also. Okay, very good. Okay, so it is a difference between VAT inclusive amount and VAT exclusive amount. Okay, so let us check. In this question, all these figures, look at this statement. Unless otherwise stated, all of the figures in the following notes are stated exclusive of VAT. Okay, unless stated it's inclusive, we can consider all the amounts in the notes are VAT exclusive amount. So here all these this 9,300 we can consider as a VAT exclusive amount, because in the note they are not mentioned, it is a VAT inclusive amount. So it will be a VAT exclusive amount. We can use 20 by 100. here because it's a VAT exclusive amount. Okay, so it will be the output VAT of discounted sales 774. Okay, so it is the when we calculate. Yes, of course, you can directly apply 20%. Okay, I just use 20 by 100 because the clarification, okay, to avoiding the confusions. That's why I just use 20 by 100. Okay, directly you can use the 20%, no issues. Okay, so it is the discounted sales adjustment. Okay, here this invoice has not been taken into account in calculating the output VAT figure of 22,500. Here we are already given with the output VAT of 22,500. This discounted sale is not including that. Okay, so that's why we have made a another computation for that. Okay, so here we have another output VAT on equipment. Okay, look at the note 2. There are something related with equipment that are explained. Okay, during the quarter ended 31st March 2023, Garfield acquired some new equipment at cost of 12,400 from a VAT registered supplier situated overseas. Okay, actually here they are purchasing an equipment. Okay, under the note 2, actually they are purchasing an equipment. Okay, I already told that at the time of purchasing any assets, if we are paying any amount at the time of purchasing anything, that amount is called input VAT. Actually here he's purchasing an asset, purchasing an equipment, and here there is an issue. He's purchasing the equipment from overseas supplier. Okay, his supplier is situated overseas. So there are certain rules set by HMRC at the time of importing and exporting. Okay, at the time of importing any assets into the UK, for example, I'm a trader in the UK. Okay, and I'm in the UK and I'm purchasing an asset from an overseas supplier. For example, I'm purchasing some assets from India. Okay, from India, I'm purchasing an asset to UK. Okay, actually, I'm purchasing an asset. Okay, but my supplier is situated overseas. Okay, so we can call it as it is import. Okay, at the time of importing any assets to the UK, we should pay an amount of output VAT to HMRC. At the time of importing anything to the UK, at the time of importing that, at the time of purchasing that particular asset, we should pay the tax to HMRC. Okay, if I'm purchasing the asset inside the UK, there is no issues. At the time of purchasing, what is the amount I'm paying as tax? That amount will be the input VAT. I can deduct that amount from my output VAT. And if I'm purchasing the assets from an overseas trader, overseas supplier, at the time of importing that asset, I should pay the output VAT to HMRC. Okay, so it is a difference between purchasing an asset from UK and overseas. Okay, at the time of importing, for example, I'm purchasing the asset with a value of 50,000. Okay, 50,000 worth asset I'm purchasing, I'm importing. At the time of importing this 50,000 valued asset, I should pay 20% standard rate tax to HMRC. Okay, and the standard rate VAT will be 10,000. Okay, if I want to use that asset in the UK, if I want to import that asset in the UK, I should pay 20% as output VAT to HMRC. So initially I'm paying this 10,000 to HMRC at the time of importing. Okay, after importing that asset, the same amount, what is the amount I paid to HMRC as output VAT, I can reclaim the 10,000 as input VAT. Okay, so the net effect is 0. Okay, so 1 second. import purchase output at, yes, out at the time of importing an asset, the output VAT and input VAT, both these figures, both the output and input VAT, we can pay and reclaim in the same return. Okay, in the same return, at the time of purchasing this 50,000 valued asset, I should pay this 10,000 to HMRC, and I'll get the refund of that 10,000 in the same return. Okay, so we just discussed what are the implications of importing any assets to the UK. At the time of importing an asset, we should pay output VAT to HMRC. Same return, that output VAT. What is the amount we had paid as output VAT? The same amount we can reclaim in the same return. Okay, so here in this question, the Garfield purchased an asset from an overseas supplier. It's an import, and 12,400 is the price of that equipment. Okay, so 12,400 into 20%, that amount Garfield should pay to HMRC at the time of importing that particular asset. Okay, so the question, it was mentioned equipment. Okay, so at the time of importing that equipment, 12,400 into 20%. They should pay as output VAT. Okay, so let us move to the next thing that, okay, in the output VAT, there is another thing, fuel scale rate. Okay, the fuel scale rate, they are already computed and it is directly given as 60. Okay, so what is fuel scale rate? The fuel scale rate, which means, okay, at the time of purchasing or using fuel in a company, okay, at the time of using fuel in a company or VAT registered trader using any fuels, they can reclaim the input VAT on fuel. Okay, normally we can reclaim the input VAT at the time of purchasing any assets or any products into the trade. If you are paying any amount as input VAT, we can reclaim that. Okay, in the similar way, what is the amount we are paying for fuel? Okay, at the time of paying the fuel, what is the VAT we had paid that we can reclaim? Okay, we can, in the normal way, we can reclaim the VAT on the fuel. Okay, there is no issue with that. But if we are claiming any input VAT on fuel, we should compute and pay an output VAT to HMRC. Okay, we can reclaim the input VAT on fuel, no issues. But if you are claimed input VAT on fuel, we should calculate and pay an output VAT to HMRC. That is the criteria for the fuel VAT. Okay, so here there's an issue. We can only find out an output VAT on the sale of any supplies. Okay, so for example, I have a car in my trading. Okay, I'm using a car in my trading, and I bought some fuel. I fill the fuel in my car, and I spent £1,000 for the fuel on my car. And at the time of paying this £1,000, it will be inclusive of VAT. That £1,000 including an element of VAT. Okay, and here also fuel also charging the 20% standard rate of VAT. Okay, so here I paid 10,000, and the 200 is the VAT I paid at the time of filling the fuel, and it will be the input VAT on fuel. Okay, so if I want to reclaim this input VAT on fuel, I should compute an output VAT. Okay, I should compute an output VAT too. So how I can compute the output VAT on fuel? Because I'm filling the fuel into my car, and I'm using the car. By using this car, the fuel is getting empty. Okay, I'm not resale that fuel to anyone. And HMRC is saying that if you are claiming input VAT on fuel, you should find out an output VAT, and that should pay to HMRC. So how we can find out the output VAT on fuel? And output VAT on fuel, we can compute on annual scale charge. Okay. So annual scale charge, which means it is the method of computing the output VAT on fuel. Okay. And the annual scale charge, uh, you'll get in the question. Okay. They'll give the annual scale charge in the question itself. Okay. You don't need to by heart anything or anything like that. It will be given in the question, fuel scale charge. Okay. In our example, the fuel scale charge is given on the basis of the CO2 emission of the car. Here I am using a car and I paid 1,000 for filling the fuel in that car, and I'm using the fuel is getting empty. So I want to compute the output VAT on that fuel. And based on the car CO2 emission, the fuel scale charge will given in the question. For example, for a quarter, the car's scale charge is the scale charge is an 860. Okay, it's an assumed amount. Just I given a scale charge of this car for a quarter is 860. So this 860 is the scale charge. So I should find out the VAT based on the scale charge. Okay, you cannot directly take the scale charge as output VAT. Okay, the scale charge will given in the question. You cannot directly take that scale charge as output VAT. Find out the VAT on the base of that scale charge. Okay, here I'm given with a scale charge of 860. So I should find out the output VAT on the base of this 860. Okay, so my output VAT will be 860 into 20%. Okay, scale charge will given in the question. So find out the output VAT on the basis of scale charge. Okay, you should not directly take that scale charge as output VAT. Find out the output VAT on the base of that scale charge. Okay, so the output VAT is 860 into 20%. That will be the output VAT. So in our example, input VAT is 200, and based on the scale charge, I just find out the output VAT, and it will be the output VAT related with the fuel, and it will be the input VAT related with the fuel. Okay, so this is how we'll find out the output VAT and input VAT. Input VAT we can directly compute. Okay, in the normal basis, we can find out the input VAT, and output VAT we should compute on the base of scale charge. Okay, so in our question, we don't need to find out the output VAT because they are already find out and it is given as 60. So we can directly take that 60 into our computation. Okay, so it will be our total output VAT, 25,840. It is the total output VAT in our example. Okay, and here we have some other input VAT also. Okay, the first one related with standard rated purchases. There are some standard rated purchases are made by Garfield, and 11,200 incurred as input VAT. Okay, and we can directly take that. And car purchased on 1st January 2023. Okay, and here there's a car that was purchased on 1st January 2023. Is there anything related with the car? Okay, so here they are mentioned that this car's input VAT is not reclaimed. It is given as 0. So we cannot reclaim a car's input VAT if the car have any private use. Okay, so for example, if I'm purchasing a car to my trade, I can reclaim. Okay, I can reclaim the input VAT on the car's input VAT if the car is 100% used for the purpose of business. Okay, for example, I bought a car for 15,000 pounds. Okay, here the output VAT actually I had paid to buy this car is 20% of 15,000. 3,000 is the input VAT I have paid to bought this car. Okay. And I can reclaim this input VAT, and there's a condition for reclaim the input VAT on the car. The car should use for the business 100%. If there's any private use made by the owner of that trade with that car, they cannot reclaim the input VAT. Okay, so here they are already mentioned the car's input VAT is cannot reclaimed. Okay, it is not mentioned as outstanding, it is mentioned as zero. So which means they cannot reclaim the input VAT. And here they have mentioned the purchasing date of the car, 1st January 2023. And you can come to the adjustment note number 5. Look at the note number 5. The car purchased on 1st January 2023 is used to buy Garfield 60% for business mileage. He's only using that car 60% for the business. So there's a private use. The car had a private use. So they cannot reclaim the input VAT on purchase. Okay, that's why they have mentioned the car's input VAT is zero. Okay. So the next thing is equipment. Equipment, we already discussed that related with the equipment. Actually, this equipment was imported from an overseas supplier. Okay, from an overseas country. And at the time of importing that particular equipment, the Garfield is already paid an output VAT. We already find out that output VAT 2480. Okay. At the time of importing that asset, he already paid 2480. The same amount he can reclaim. At the time of importing that asset, he paid a VAT. The same amount, what is the amount he was paid at the time of importing that asset? The same amount he can reclaim in the same VAT return. Okay. So the net effect is zero. At the time of importing any assets, the net effect is zero. We should pay the tax initially, then we can reclaim the same. Okay, so the net effect is zero in this question. And look at the next one, impairment losses. Okay, impairment loss, which means in our tax syllabus, impairment loss means it is irrecoverable debt. Okay, irrecoverable debts are mentioned with impairment losses. Okay, it is a term we are used to mention the irrecoverable debt. Okay, actually, the impairment loss relief, which means I'll explain that, then we can come to the scenario. Okay, guys, 1 minute, 1 minute. Okay. Yes, sorry guys, that was an emergency call. Okay, so let us explain what is impairment loss relief. Okay, I already mentioned that impairment loss, which means it is the irrecoverable debt. Okay, for example, in a quarter, I made a sales of 500,000. Okay, 500,000 is the sales I had made in a quarter. And out of this 500, it is the total sales. Okay, it was the total sales. And out of this 500,000, 200,000 was a credit sale. Okay, 200,000 was a credit sales. And if we have made any credit sales, we should pay the output VAT to HMRC. Okay, if we are making any sales, we should pay the output VAT to HMRC. Okay, there is no matter if you are collect the VAT or not. If you have made the sales, we are liable to pay the output VAT to HMRC. Okay, so in our example, I made total sales of 500,000. Out of that 500,000, 200,000 is a credit sale. So in this quarter, I should pay output VAT on the base of 500,000 on the base of total sales. So 500,000 into 20 percentage, 100,000 I should pay as output VAT. Okay. And after done with this quarter, out of this 200,000, I was not able to encash the whole 200,000. Okay. The total receivables of 200,000, I was not able to collect. Okay. Actually, from this 200,000, there was some irrecoverable debt of 30,000. Okay. Out of this 200,000 credit sales, 30,000 was irrecoverable debt. Okay. Actually, I am not received an amount of 30,000. Okay. But I already paid output VAT on this 30,000 too. Okay, so here actually I paid an output VAT on 30,000, but actually I'm not receiving that amount. So I should, I'm able to receive the cashback on that 30,000. Okay, so I can reclaim the VAT on this 30,000 in the future return. Okay, so from this 30,000, on this 30,000, I was paid a 20% VAT. Okay, so the VAT on this 30,000 will be 6,000. Okay, so HMRC will give a refund on this 6,000 because I'm not collected that amount and I don't receive that amount, but I already paid the output VAT on that amount. So HMRC will give refund on the VAT of that sales. Okay, so it is called impairment loss relief, irrecoverable debt relief. Okay, so there is one condition is there. We can use this impairment loss relief after 6 months of the due date of that debt. Okay, immediately after making that irrecoverable debt, once when I came to realize that this 30,000 is irrecoverable debt, I will never get that 30,000, and I'm sure that about. Okay, sure about that. So immediately after making this 30,000 as irrecoverable debt, I cannot reclaim the input VAT or irrecoverable debt relief because there's a time criteria. HMRC mentioned a time criteria. Okay, we can only reclaim the input VAT on irrecoverable debt after 6 months of the due date. Okay, only we can claim after 6 months on due date. Okay, so here there is a note in the related to the impairment loss under the 3. Okay, look at the note. Actually, our quarter end is 31st March 2023. The first impairment loss is 1,400. 1,400 due date is 29th August 2022. Okay, due date is 29th August 2022. And from 29th August 2022, we can count. When it comes to 29th September, it will be 1 year. October, November, December, Jan, Feb. At 29th 2023, 6 months is completed on this 1,400 debt. Okay, so this 1,400 on this 1,400 we can claim the impairment loss relief because our quarter end is 31st March 23 and the due date of this 1,400 was 29th August 22. So here our quarter end is after 6 months. Okay, so we can reclaim input VAT on 1,400. Okay, so here 1,400 into 20%, we can reclaim. Okay, so look at the next impairment. That was 2,700. It was due on 12th October 2022. So from the due date to the quarter end, it's not 6 months are completed. Okay, it was due on 12th October 2022. So November, December, Jan, Feb, March, April. Only by April, it will complete the 6 months. So we'll never get a refund on this 2,700 and 1,900 also. 1,900 is due on 3rd November. Okay, so we can only reclaim the impairment loss relief on 1,400. Okay, so impairment loss relief. 280 is the impairment loss relief. Okay, so look at the next adjustment. Next adjustment is entertainments. Entertainment of two customers, UK customers and overseas customers. The condition for entertainment expenses for customers, if I'm making any entertainments for the UK customers, I cannot reclaim the input VAT incurred for the entertainments I spend to UK customers. Okay, and if I'm spending any amount for entertaining my overseas customers, if there is any VAT incurred at the time of entertaining the overseas customers, that amount is deductible. Okay, so entertainment of overseas customer as a deductible amount, and entertainment of UK customers is non-deductible. Okay, the VAT element. Okay, so look at the scenario. Okay, entertaining. During the quarter ended 31st March 23, Garfield spent 960 on entertaining overseas customers. Okay, this figure is inclusive of VAT. Okay, so 960, it is the amount he had spent to entertaining overseas customers. So the input VAT is recoverable. Okay, so and this 960 is inclusive of VAT. So this much amount we can deduct. Okay, 960 into 1 by 6. 960 into 1 by 6, otherwise 20 by 120. Okay, it is the amount for entertainment of overseas customers. Okay, we can deduct that. Okay. And we have some car expenses. Okay, look at the last note, car expenses. In the 5th note, the car purchased on 1st January 2023 is used by Garfield 60% for business miles. During the quarter ended 31st March 23, Garfield spent 1,008 on repairs to the car. Okay, so if any traders are spending any amount on repair or maintenance, or accessories. Okay, if a trader spend any amount repair, maintenance, or accessories for a car, even if it is a private used car, they can deduct the input VAT on these expenses. Okay, in our example, this car was not completely used for the trade. Okay, there was an element of private use. And that's not a matter while considering the input VAT claiming. Okay, even if it is a private use car, they can reclaim the repair input VAT on repair, maintenance, accessories. Okay, so here we can deduct the input VAT on repair. The repair, they had spent 1,008 for repair, and these figures are inclusive of VAT. Okay, so 1,008 into 1 by 6. This much amount they can deduct as input VAT. Then, okay, after that they also spend 660 on fuel. Okay, 660 on fuel, And I already mentioned that the rules regarding the fuel. If a person using the fuel scale charge to finding out the output VAT, he can completely reclaim the input VAT on the fuel. Okay, even though it's a private fuel, that's not a matter. If the person is using the scale charge to finding out the output VAT, he can reclaim the wall input VAT. Okay, on the fuel. Here actually they are spending 660 on fuel. Okay, so 660 into 1 by 6 they can deduct. This figure also VAT inclusive amounts. Okay, so it will be the input VATs. Okay, hope we're done with it. Okay, we just done with the all the input VATs. So the total input VAT in this question will be 14,398. So the VAT payable will be total output VAT minus total input VAT. So the VAT payable will be 11,416. It will be the VAT payable amount. Okay, so it is all about the first requirement of this question. Is it clear, guys? Is it okay? Okay, good. Yes. Okay, so look at our next scenario. Sorry, next requirement. Okay. Here we are required to make an explanation regarding the MTD. MTD, which means making tax digital. It is an innovative thing HMRC implemented in the UK tax system in the recent past. I think before 2-3 years back, HMRC actually introduced this MTD, making tax digital. Actually, it's a set of softwares we can use in our um, business or our trade. Okay, and with this MTD softwares, we can that software will directly compute the output VAT and input VAT, and the VAT returns done by that software by automatically by itself. And there are lots of advantages by using this MTD in our trade. Okay, the VAT returns we can easily done with these softwares, and the computations also. Okay, and I think it most probably it will never tested in the exam because it was recent innovation of HMRC. So you just go through the textbook related to the MTD, that's enough. And we don't have that much questions related with the MTD also. Okay, just go through the textbook, that's enough. Okay, so we just done with this question. And in the VAT part, the most important thing in the VAT is the schemes. Okay, you should not skip with the schemes. The condition, we have 3 schemes in our VAT system. Okay, I'll explain that VAT schemes in every examination. Okay, in every examination, there should be some questions related with the VAT schemes. Okay, the first scheme is cash accounting scheme. And the second one is annual accounting scheme. Okay, to join and leaving these 2 schemes, the criteria are similar. Okay, both of these 2 schemes, the criteria are similar. Okay, and to join a cash accounting scheme or annual accounting scheme, the annual turnover of the trade or company should less than 1.35 million. Okay, if a trader's annual turnover less than 1.35 million, they can join either cash accounting scheme or annual accounting scheme. It is the first criteria for joining any of the scheme. And the second criteria is that the annual turnover should be less than 1.35 million, and the VAT related things, all the VAT returns, VAT payments should up to date. Oh, sorry. Okay, every VAT related affairs with the HMRC up to date. If I had any um, unpaid VAT, outstanding VAT in my history, I cannot join for any of the scheme. Okay, so I cannot register for any scheme. Okay, so if I want to join cash accounting scheme or annual accounting scheme, my annual turnover should be less than 1.35 million, and my VAT related things should be up to date. Okay, and these are the criteria for joining either any of these two schemes. And after joining with this scheme, might be my turnover will go beyond 1.35 million. There is no issues. If I'm after joining with this scheme, if my turnover goes to 1.4 million, no issue. I can stay with the scheme. And if it is 1.5, that's okay. And if my annual turnover exceeds 1.6 million, then I should leave the scheme. Okay, if my turnover exceeds 1.6 million, I cannot continue with this scheme. Okay, I should leave the scheme immediately after crossing my turnover 1.6 million. Okay, that's mandatory. And for the cash accounting scheme, once the annual turnover exceeds 1.6 million, they can continue with the cash accounting for a 6 months. Okay, additional 6 months they can use the cash accounting. Okay, that 6 months exemption only for cash accounting scheme. That's not available in annual accounting scheme. Okay, so these are the criteria for joining and leaving for both of these schemes. And for the what are the advantages of using the cash accounting scheme? Once we are started or once we are joining the cash accounting scheme, we only need to find out the output VAT and input VAT on the base of actual cash flow. Okay, previously we just uh, discussed with the impairment loss relief. Under the cash accounting scheme, automatically that impairment loss relief will be covered. Okay, because I'm getting an amount on the sales, on the base of what is the amount I'm actually getting from a sale, I only need to pay tax on that actually received amount. Okay, and no need to pay any output VAT on credit sales. And the same time, I can only reclaim the input VAT on the cash purchases. What is the amount I'm actually paid as cash? On the basis of that paid amount, I can find out the input VAT. And on the basis of actual amount received, I can find out the output VAT. Okay, based on the actual cash flow, we will find out the output and input VAT in cash accounting scheme. That is the speciality of cash accounting scheme. And when it comes to the annual accounting scheme, in only in VAT system, only the annual accounting scheme members can compute the VAT annually. Okay, all other taxpayers, other than annual accounting scheme members, everyone should compute their VAT quarterly. Okay, normally VAT period is quarter, but only for annual accounting scheme members, they can find out they can compute the VAT annually. They only need to file the VAT return annually. Okay, and they should. Okay, the speciality of annual accounting scheme is annually single computation of VAT. Okay, and they only need to find out the VAT in a year, and only single return is needed in a year. Okay, but when it comes to the payment for the annual accounting scheme members, they should make the payment for an year in 10 installments. Okay, they should make the payments to HMRC in 10 installments. Okay, annually single computation is only need, single return is only need, but payment should made in 10 installments. And out of these 10 installments, it consists of 9 payment on account and 1 balancing payment. Okay, this is how annual accounting scheme members paying the VAT. Okay. For example, I'm an annual accounting scheme member. Okay. My accounting period runs from Jan to December 2023. Okay. So the first payment on account, I should make the payment of VAT in this particular period in 10 installment, and it consists of 9 payment on account and 1 balancing payment. And my first payment on account, I should pay in the last day of the 4th month. Okay, on the last day of the 4th month, I should make the first payment on account. And second, third, fourth, fifth, all remaining payment on accounts will due on the coming month ends. Okay, so the next payment on account will be due on, so the first installment will due on 4th month's last day. My accounting period starts on January 2023. Okay, which is the 4th month in this particular accounting period. It will be April. Okay, Jan, Feb, March, April. So the first payment on account will due on 30th April 2023. And the remaining payment on accounts will due on very next month's last dates. Okay, so the second payment on account will due on 30th May 2023. And the next payment on account will due on, it will be 31st May. And the next payment on account will due on 30th June 2023. Next will be due on 31st July 2023. Okay, like this, we should make a 9 payment on accounts. The first payment on account due on last day of 4th month. After that, every month then a payment on account will be due. Okay, and the last balancing payment will be due on 2 months after year end. Okay, our year end is on 31st December 2023. 2 months after year end. Okay, so December is the end, and 2 months after the end, Jan, Feb. So 29th of Feb 2024. It will be the day of I should make the balancing payment. Okay, and along with the balancing payment, I should make the VAT return. Yearly, I only need to file a single VAT return, and that I should submit to HMRC in the second month after the accounting period end. Okay, and this is how we'll make the payments. Okay. Okay, so this all about the briefing about the annual accounting scheme. And the last scheme is flat rate scheme. It is a third scheme. And actually, this flat rate scheme designed for small scale traders. Okay, if a traders traders turnover, if it is less than 150,000, they can join the flat rate scheme. Okay, so it's a small scale trader scheme. Okay, and once the turnover cross 230,000, they should leave the scheme. Okay, these are the criteria for joining and leaving the flat rate scheme. These are the amount criteria of turnover. And the speciality of the flat rate scheme is that once at the time of joining in the flat rate scheme, we'll get a flat rate. Okay, depends on the sector we are working with. Okay, for each and every sectors, there's a fixed flat rate percentages. Okay, for example, my flat rate percentage at the time of joining the scheme, it was 14%. Okay, if my flat rate percentage is 14, I can directly multiply this 14% on total turnover. Okay, flat rate percentage we should apply on the total turnover of the trade. Okay, and under the flat rate scheme, there is no differentiation like standard rated, exempt rated, zero rated, like that. Okay, so what is my turnover? Okay, what is my turnover? Took the total turnover into 14%. Okay, that will be my output VAT. Okay, under the flat rate scheme, we don't need to find out the separate output VAT and input VAT. Take the total turnover, multiply the flat rate percentage. That will be the VAT payable. Okay, computation wise, flat rate scheme is more simple. Okay, and it is the rules related with the flat rate scheme. Okay, these are the just briefing of these three schemes. Okay, and guys, do you have any doubts regarding with VAT? Because there are lots of points are there, and if you have any doubts regarding with the VAT, we'll discuss that. Otherwise, we will go to the next question. Already you had suggested a question.
Sorry, flat rate scheme nathi. The total turnover, kekama sare?
Yes.
Total turnover exclusive amount 1,50,000. അങ്ങനെയാണോ സാറേ?
VAT inclusive amount. അതായത് ഇപ്പൊ ഒരു എക്സാമ്പിൾ പറയാം.
രണ്ടും ഇൻക്ലൂസീവ് തന്നെയാണ്.
ഇൻക്ലൂസീവ് ആണ്. യെസ്.
അല്ല, ജോയിൻ ചെയ്യാനും ലീവ് ചെയ്യാനും ഉള്ളത് രണ്ടും ഇൻക്ലൂസീവ് തന്നെയാണ്.
ജോയിൻ ചെയ്യാനും ലീവ് ചെയ്യാനുള്ളതാണ്. അത് എക്സ്ക്ലൂസീവ് ആണ് കേട്ടോ. ഫ്ലാറ്റ് റേറ്റ്
ഒരെണ്ണം എക്സ്ക്ലൂസീവും ലീവ് ചെയ്യാനുള്ളത് ഇൻക്ലൂസീവും, അങ്ങനെയല്ലേ സാറേ?
അത് രണ്ടിലും ഒരു സെക്കൻഡ് ഇപ്പൊ തന്നെ ക്ലാരിഫൈ ചെയ്ത് തരാം. നമുക്ക് ടെക്സ്റ്റ് ബുക്കിൽ തന്നെ നോക്കാം. Flat rate scheme. ജോയിൻ ചെയ്യുമ്പോൾ വാറ്റ് എക്സ്ക്ലൂസീവ് എമൗണ്ട് ആണ്. പിന്നെ ലീവ് ചെയ്യുമ്പോൾ വാറ്റ് ഇൻക്ലൂസീവ് ആണ്. യെസ്, വാറ്റ് 150,000 എക്സ്ക്ലൂസീവും 230,000 ഇൻക്ലൂസീവും. യെസ്. ഓക്കെ. പിന്നെ സ്കെയിൽ ചാർജ് എന്താണെന്നല്ലോ. ഓക്കെ, സ്കെയിൽ ചാർജ് നമ്മൾ യൂസ് ചെയ്യുന്നത് എന്തിനാന്ന് വെച്ചാല് ഓക്കെ, സ്കെയിൽ ചാർജ് നമ്മൾ യൂസ് ചെയ്യുന്നത് എന്തിനാന്ന് വെച്ച് കഴിഞ്ഞാൽ ഫ്യൂവലിന്റെ ഔട്ട്പുട്ട് വാറ്റ് കാൽക്കുലേറ്റ് ചെയ്യാനാണ്. അതായത് ഫ്യൂവൽ ഫില്ല് ചെയ്യുമ്പോൾ നമ്മളോട് പറഞ്ഞിട്ടുണ്ട് okay, fine. Sorry, really sorry that. Okay, the scale charge, which means actually the scale charge used to find out what is the output VAT on fuel. Okay, so we can find out the input VAT in the normal way. Okay, I already make an example previously. Okay, here actually, 1 second. Okay, here we have an example. Actually, I paid £1,000 for filling fuel into my car, and actually I paid a 20% tax at the time of filling that fuel, and the input VAT is 20%, and I paid 200 as my input VAT. It is my input VAT. We can simply find out the input VAT. And if I'm following the annual scale charge method, I should find out the output VAT on the base of the scale charge. Okay, and the scale charge is fixed by HMRC. So we don't need to buy heart, or we don't need to know anything further about the related with the scale charge. It will be directly given in the question. Okay, so in our example, the scale charge is given. The scale charge is 860. Okay, so actually this 860 is not the scale charge. Based on this 860 scale charge, we can find out the output VAT. Okay, sorry, 860 is not the output VAT. 860 is the scale charge. Based on this 860 scale charge, we can find out the output VAT. Okay, so here I'm given with the 860. It was the scale charge, and I can find out the output VAT by using this what is the tax element of this 860. That will be my output VAT. Okay, 860 into 20%. That is the output VAT. Okay, so here my input VAT I just computed by using the same method, normal method, and output VAT on fuel we can find out with the scale charge. Scale charge will given in the question, and just find out the VAT on the scale charge. That will be the output VAT. Okay.
Scale charge would be inclusive of VAT or exclusive of VAT? I mean, I need to deduct scale charge. I need to separate the inclusive of VAT, or I'll take that scale charge as it is and then apply 20% on that amount directly.
Yes, yes. It will be mentioned in the question itself. If it is exclusive of VAT, you can directly multiply the 20%. Otherwise, you can multiply 20 by 120. Okay, it will be mentioned in the question.
Okay, thank you.
Okay. Okay, guys. And if you have any other doubts. Okay, previously, I think somebody made some suggestions for practicing a question. Actually, I don't remember that. And guys, anyone have any other doubts? Yes.
Sir, withholding tax എന്താ ഒരു past questionൽ കണ്ടതായിരുന്നു.
വിത്ത്ഹോൾഡിംഗ് ടാക്സ് എന്ന് പറഞ്ഞു കഴിഞ്ഞാൽ നമ്മൾ ഹോൾഡ് ചെയ്യുന്ന ടാക്സിന് അതിന് മീനിങ് ഉള്ളു. അത് പ്രത്യേകിച്ച് ഒരു എന്താ പറയാ, ഒരു ടാക്സ് റൂൾ ആയിട്ടില്ല. നമ്മൾ ഹോൾഡ് ചെയ്യുന്ന ടാക്സ് എലമെന്റിനെയാണ് വിത്ത്ഹോൾഡിംഗ് ടാക്സ് എന്ന് പറയാം. അതായത് HMRC നമ്മുടെ ടാക്സ് ഹോൾഡ് ചെയ്യുന്നുണ്ടാവുമല്ലോ. അതായത് നമുക്ക് ഈ ഔട്ട്പുട്ട് വാറ്റും ഇൻപുട്ട് വാറ്റും വരുമ്പോൾ ഇൻപുട്ട് വാറ്റ് ആണ് കൂടുതൽ എന്ന് വിചാരിക്കും. അപ്പൊ HMRC നമുക്ക് റീഫണ്ട് തരണ്ടേ? HMRC ഹോൾഡ് ചെയ്ത് വെക്കുന്നുണ്ടാവും. അങ്ങനെ ഹോൾഡ് ചെയ്യുന്ന ടാക്സിനെയാണ് നോർമലി ഇങ്ങനെ ഇതായിട്ട് പറയുന്നത്. നമുക്ക് ടാക്സിൽ അതിന്റെ ഒരു റൂളായിട്ടൊന്നും പഠിക്കാനൊന്നുമില്ല. ആ ഹോൾഡ് ചെയ്യുന്ന ടാക്സിനെ അങ്ങനെ പറയുന്നുള്ളൂ. അത് ചിലപ്പോൾ നമ്മൾ ഹോൾഡ് HMRC ഹോൾഡ് ചെയ്യാം. ഓക്കെ, യെസ്. ഓക്കെ, എനിബഡി ഹാവ് എനി അതർ ഡൗട്ട്സ് related with VAT? Okay. So hope you all are okay with the VAT things. All the important things, almost the important things we just mentioned in our session. And if you have any further doubts, you can clarify that in the coming days also. Okay, today we are exclusively made some time for the portion of VAT, and still do you have any doubts, you can ask the coming days also. Withholding tax in tax interest കിട്ടും. ഓക്കെ, അതായത് ടാക്സ് ഹോൾഡ് ചെയ്ത് കഴിഞ്ഞാൽ അതിപ്പോ വാറ്റ് എന്നല്ല, ഏത് ടാക്സ് ആണെങ്കിലും ടാക്സ്. ഓക്കെ, അത് ഞാൻ ഇംഗ്ലീഷിൽ പറയാട്ടോ, ബാക്കി കുട്ടികളുള്ളതല്ലേ. ഓക്കെ, സോ ഇഫ് ദർ ഈസ് എനി ടാക്സ് ഹോൾഡ് ബൈ HMRC, or if any making any delay in making payments by the taxpayer, both cases the interest is chargeable. Okay, for example, HMRC is liable to refund some amount to me, and HMRC paying that amount to me after 3 months, and I'll get that refund plus 0.5% interest. If I'm making any delay to paying the tax to HMRC, and I should pay that amount to HMRC with an element of interest. Okay, both holding is 3.25. Yes, 3.25% interest is chargeable. Okay, at the time of paying the late paying interest at 3.25, HMRC will pay to us only 0.5. Okay, and any doubts related with VAT?
Sir, ആ past question ഒന്ന് ഡിസ്കസ് ചെയ്യോ?
ഏത് ക്വസ്റ്റ്യൻ ആയിരുന്നു?
ഇപ്പൊ ഈ withholding tax പറഞ്ഞില്ലേ,
ആ,
അതിന്റെ ഒരു ക്വസ്റ്റ്യൻ ഉണ്ട്. June 23 ആണ്. CBE പ്രാക്ടീസ്
പ്ലാറ്റ്ഫോമിലുള്ളതാണോ? അതെനിക്ക് എന്നാലൊന്ന് സ്ക്രീൻഷോട്ട് എടുത്തിട്ട് തരുമോ? അത് എന്റെ നമ്പർ ഞാൻ ഷെയർ ചെയ്ത് തരാം, അതിലേക്ക് ഒന്ന് സെൻഡ് ചെയ്താൽ മതി, ഞാൻ ക്ലാരിഫൈ ചെയ്ത് തരാം. ഓക്കെ, കാരണം വേറൊന്നുമല്ല, ഇതിൽ നമ്മൾ എടുത്തു പോകുമ്പോൾ കുറെ പ്ലാറ്റ്ഫോമിൽ കയറി അത് എടുത്തു വരുമ്പോൾ ടൈം പോകും, അതുകൊണ്ടാണ് കേട്ടോ. Okay. Okay. And if any doubts, is there any doubts? Okay then. Okay. So if you feel any difficulties related with these topics, you can clarify that coming days also. And today we are going to take a small break. After that, we'll discuss some questions from IHT. Okay, so you can take a 5 minutes break. Yes, we can take a 5 minutes break. Yes. Okay, guys, let us restart. Okay, so now we are going to discuss a question from IHT. Okay, guys, do you have any suggestions in any question from the part IHT? Okay, these are the questions we have in Kaplan Kit. Okay, any suggestions? 1 second. If you don't have any suggestions, we can pick any questions randomly. Okay, so let us. Okay, so let us discuss Lebna and Lulu. Okay, here we have a suggestion. Question Lebna and Lulu. Okay, so let us discuss that. 210. Okay. So guys, while you are attending the section B questions in the exam, time management is that much important in our exam. Okay, so in any section B questions you are attending in the exam, first you don't go through the scenario. Okay, you should not go to the scenario initially. Okay, first you should go to the first requirement. Okay, first go to the first requirement and read the requirement carefully, and then come to the scenario. Then you can start reading the question. Okay, most probably the exam structure is like the first requirement will be based on the first part of the question. Okay, then first read the first requirement, then come to the first part of the question, and once you got the answer from the first initial part to the first requirement, then just go to the second requirement and then read the remaining parts. Okay, like this wise you should arrange your B section question practice. Okay, so it will help you to save more time in the exam. Okay, and definitely in the section B question, at least one question will be a general question. Okay, one question will be related with overall with IHT. Which question is tested in the section B? The one, at least one. In some questions, it will be two. One or two questions will be a general one. Okay, it will never based on this scenario. Okay, so
ജനറൽ ക്വസ്റ്റ്യൻ നമ്മുടെ അസസ്മെന്റ് വെച്ചിട്ടാണോ ഡേറ്റ് വെച്ചിട്ടാണോ സാർ
ഡേറ്റ് ആവണം
അങ്ങനെയാണോ സാർ
ഒന്നുമില്ല. അങ്ങനെ ഡേറ്റ് ആവണം നിർബന്ധമൊന്നുമില്ല കേട്ടോ. ഏതെങ്കിലും ഒരു ജനറൽ ക്വസ്റ്റ്യൻ ആവാം. ഓക്കെ, ഇപ്പൊ ഇതിൽ നമുക്ക് ഏതാണ് വരണത് എന്ന് നോക്കാം. ഇതിലേതെങ്കിലും ഒരെണ്ണം വരുമായിരിക്കും. IHT ഇതിലില്ല എന്ന് തോന്നുന്നു. ഇതവർ അമെൻഡ് ചെയ്ത ക്വസ്റ്റ്യൻ അല്ലേ, അപ്പോൾ ആ ജനറൽ മാറ്റിയിട്ട് ഇവര് ഇതിൽ തന്നെ ആക്കിയിട്ടുണ്ട്. അഡാപ്റ്റഡ് ക്വസ്റ്റ്യൻ ആണ്. അപ്പോൾ അവരിതെന്തായാലും ചേഞ്ചസ് വരുത്തിയിട്ടുണ്ടാവും. ഓക്കെ, അപ്പൊ ഇനിയുള്ള ക്വസ്റ്റ്യൻസ് നിങ്ങൾ ചെയ്യുമ്പോൾ ഒന്ന് ശ്രദ്ധിച്ചു നോക്കുക. സെക്ഷൻ B ക്വസ്റ്റ്യനിൽ എന്തായാലും ഒന്നോ രണ്ടോ ക്വസ്റ്റ്യൻസ് ജനറൽ ക്വസ്റ്റ്യൻസ് കോമൺലി വരും. അതെപ്പോഴും ഡേറ്റ് ആവണമെന്നൊരു നിർബന്ധമില്ല. ഏതും ആവാം, ഏത് ക്വസ്റ്റ്യനും ആവാം. ഓക്കെ, അപ്പോൾ നോർമലി ഡേറ്റ്സ് ചോദിക്കാറുണ്ട്. ഓക്കെ, അത്രയേ ഉള്ളൂ. അപ്പോൾ ഡേറ്റ്സിൻ്റെ മാത്രം ഒരു PDF ഞാൻ ഷെയർ ചെയ്ത് തരാം. അതിപ്പോൾ എങ്ങനെയാണ് ഷെയർ ചെയ്യാം?
എല്ലാത്തിന്റെയും കൂടിയാണോ സാറേ?
എല്ലാ കംപ്ലീറ്റ് ഡേറ്റ്സ് PDF ഞാനത് ഷെയർ ചെയ്ത് തരാം. എനിക്കൊന്ന് മെസ്സേജ് ചെയ്താൽ മതി. ഓക്കെ, യെസ്. Okay, so let us start our question. Okay, so look at the first requirement. If Lebna were died today, 1st March 2023, how much of Lulu's nil rate band will the personal representative of Lebna's estate be able to claim when calculate IHT payable on his chargeable estate? Okay. How much of Lulu's nil rate band? Okay, so we can here actually we are tested with in the first requirement they are testing what is the amount of nil rate band spouses can transfer between. Okay, so we the unused nil rate band spouses can transfer. Okay, the normal nil rate band and also the residence nil rate band, both nil rate bands at the time of death of the first partner, if there are any unused nil rate bands are available, even if it is normal or residential, both of the nil rate bands are unused, that unused nil rate band can transfer to the living partner. Okay, and the living partner can only use that transferred nil rate band only on death estate. Okay, for the lifetime transfers, they cannot use the transferred nil rate band. Okay, that is the criteria for nil rate band transfer. Okay, on the death of first partner, if the any unused nil rate bands that can transfer to the living partner, and the living partner cannot use that transferred nil rate band in the lifetime transfers. Okay, they can only use that transferred nil rate band on the death estate only. Okay, so here let us go to the scenario. Okay, Lebna and Lulu were married couple, but unfortunately Lulu died on 24th January 2018. So Lulu is already died in 2018. Okay, and here Lulu, the scenario is given related to Lulu. Lulu left an estate value 210,000 for IST purposes. The estate did not include a main residence. Okay, so at the time of death of Lulu, the death estate value was 210, and which is not include a main residence, which means on the death of Lulu, Lulu is not able to use the residence nil rate band. Okay, because there is no residential property in the death estate, so they cannot use the residential nil rate band. Okay, so under the terms of her will, Lulu left a specific legacy of 40,000 to her brother, the residue of the estate to her husband Lebna. Lulu had made the following lifetime transfers. In the lifetime, Lulu made these transfers. Okay, so let us check what is the okay, what is the unused normal nil rate band of Lulu on death. Okay, Lulu's nil rate band is maximum nil rate band is 325,000 normal nil rate band. So in the lifetime, in 30th February 2010, there was a lifetime transfer. It was a CLT. It was a CLT in 2010 that was 50,000, and he was used a 50,000 nil rate band in 2010. Okay, in 2010 there was a transfer value was 50,000, And the next transfer was on 2016. 2016, and the transfer was 80,000. Okay, the first transfer was a CLT, chargeable lifetime transfer. Second one is a PET. Okay, and actually in 2016, the PET is initially exempted. At the time of transfer, PET is entirely exempted. And in 2016, no need to use any nil rate band in 2016 on this PET. And sorry, in 2010, 50,000 was a CLT. CLT is chargeable on the transfer itself. Okay, and the death was happened on 2018, 24th January 2018. Okay, so let us check. This 80,000 will be chargeable on 2018. Sorry, the 80,000 PET, it will be chargeable on death, because after making this transfer within 3 years, Lulu was died. Okay, so at the time of death, the 80,000 will be chargeable, and that will cover under the nil rate band. Okay, and the first transfer is on 2010. In 2010, 13th February 2010. And how, if it is exempted or chargeable on the death of Lulu, this 50,000 is transferred on 2010 February, 2011, 12, 13, 14, 15, 16, 17. By 2017 February, it will complete in the 7 years. So there is no additional tax liability on death on this CLT. Okay. So on death of Lulu, this 50,000 will not be a chargeable amount, chargeable transfer, and the PET on 2016, it will be chargeable on death. Okay, so on the death, 325,000 nil rate band is available, 80,000 is already used for 2016's transfer, and he had a 210,000 value death estate, and the death estate does not qualify for residential nil rate band, and a 40,000 asset he transferred to his brother, her brother. Okay, so that 40,000 will be a chargeable amount, and that will also reduced from nil rate band. And the remaining death estate, out of this 210,000, 40,000 transferred to brother, and the remaining amount transferred to husband Lebna. Okay, so this 40,000 remaining amount will be completely exempted. Okay, the first spouse transfer is always exempted from IHT. So the nil rate band is 325,000. Out of this 325,000, only this much used to buy Lulu. Okay, the remaining normal nil rate band is 205. Okay, it is remaining amount. And at on the death of Lulu, the residential nil rate band is unused because he don't have any residential property. That's why he is not able to use any residential nil rate band. But our rule is on the death of first partner, if the nil rate band is not utilized, that unused nil rate band they can transfer to the living partner. Okay, so here 175,000, the whole unused residential nil rate band they can transfer to the living partner. Okay, so residential nil rate band they can transfer 175. Normal nil rate band 205. Okay. Okay. Here they are only mentioned about how much of Lulu's nil rate band? Only they are mentioned about the nil rate band. So they can transfer 205. Okay, they are only mentioned about normal nil rate band. So the answer will be 205. And here also they are not using the life residential nil rate band. They can also transfer to the living partner. Okay, so here in this scenario, actually we are only required to find out what is the normal nil rate band. What is the Lulu's nil rate band they can transfer to the living partner Lebna. Okay, so it will be 205. Okay, is there any doubts related with this first requirement? Okay, so normally we can deduct annual exemption on this 80,000 transfer. Actually, we can deduct that, but here we have, they are mentioned here, both of these transfers are after taking account of all available exemptions. Okay, so these figures are net of annual exemption and all those deductions. Okay, so that's why we are not deducting annual exemption. Okay, so it is the answer of the first requirement. So let us move to the second one. In the second requirement, if Lebna were died today, 1st March 2023, what is the total amount of residence nil rate band which will be available when calculating the IHT payable on his chargeable estate? What will be the maximum nil rate band? You can answer that. What is the maximum residence nil rate band will be available? What will be the maximum residence nil rate band available on death of Lebna? It will be the maximum. Okay, yes, good, good. We already mentioned that the unused nil rate band of Lulu can transfer to Lebna. Okay, because it is completely unused. And Lebna can use his nil rate band of 175,000 and plus his wife's nil rate band of 175,000. Total residence nil rate band available is 350,000. 350,000 is available. Okay, 175 of Lebna and 175 of Lulu. Total 350,000 is available on the death of Lebna's death. Okay, and if the assets value, if the residential properties value is lower than 350,000, they cannot completely use the 350. Okay, the available maximum residential rate band is 350, and they can only use if the properties value, residential properties value is lower than 350, they can only use that much. Okay, for example, if the residential property have only 300,000 value, they can only use the residential rate band at the maximum of 300,000. They cannot use the 350. Okay, so here the available maximum is 350,000. Okay, both partners complete nil rate band is available. So let us go to the third requirement. Look at the third one. What is the amount of the PET which Lebna potentially exempt transfer which Lebna has made to his son on 22nd February 2018? The gift of 60,000 shares in Belan Limited after deducting any available exemptions. Okay, so look at another scenario. Lebna made a gift to son on 22nd February 2018. So there's a special rule for valuation of transferring the shares, we have a separate rule. Okay, actually we'll take what is the value before making the transfer and what is the value after making the transfer. The difference in the value, the diminution in the value will be the value transferred. Okay, so come to a scenario. On 22nd February 2018, Lebna made a gift of 60,000 pound on ordinary shares in Belan Limited, an unquoted investment company, to his son. Before the transfer, Lebna owned all of Belan Limited share capital of 100,000 ordinary shares. So here, before making the transfer, he was holding 100,000 shares. Okay, from this 100,000 shares, he gifted 60,000 share to son. And after making the transfer, the number of shareholding reduced to 40. Okay, so now we are going to value these shares. Okay, the hints of valuation is given in the question itself. If a person holding 100% shares in the company, each share's value is 7.10. Okay, so before transferring the shares, the value of the share was, he's holding 100,000 shares. Each shares have a market value of 7.10. Okay, so before making the transfer, the shares value is 710,000. And after making the transfers, his shareholding is reduced to 40%, 40,000 number of shares. Okay, if a person having a 40% shareholding in that company, the market value of single share is 4.2. Okay, so after making the transfer, the shares value will be reduced to 40,000 into 4.2. Okay, the value is reduced to 168,000. So before making the transfer, shares value was 710,000. After making the transfer, it is reduced to 168,000. So the value transferred will be the difference among these two figures. 7,10,000 minus 168,000. The balancing figure will be the value transferred. It is the value of 60,000 gifted shares. Okay. And it is the value transfer, and it is not potentially exempted PET, which means the PET will be the amount after making the available exemptions. Okay, so here they can deduct the annual exemption also. Okay, so let us check the scenario if there was any okay, here nothing mentioned about Lebna had not made any previous lifetime gifts. Look at the last line of the gift to son, that scenario. Lebna had not made any previous lifetime gifts. Okay, so in the previous years, he was not made any gifts. So the complete annual exemption of current year and previous year is available. Okay, so this hint is for that. Previous year's annual exemption is unused. Okay, so current year's annual exemption 3,000 they can use, and also they can use the previous year's annual exemption. So after deducting the annual exemption amount, the PET amount will be 536,000. Okay, so in the question number 3, 536 will be the answer. Okay, 536. Okay, so let us move to the next question, next requirement. If Lebna were to die today, 1st March 2023, what taper relief percentage reduction would be available when calculating the IHT payable on the potential exempt transfer which he made to his son 22nd February 2018? Okay, so this transfer was made on 22nd Feb 2018. Okay, it was the date he made this transfer to his son, 22nd February 2018, and he died on 1st March 2023. 1st March 2023. So at the time of death, we'll get taper relief for the lifetime transfers. Okay, based on how much years that donor was alive after making the transfer. Okay, and the criteria for getting this taper relief, the donor should live for at least 3 years. If the donor alive for between 3 to 4 years after making the transfer, they'll get a 20% taper relief. If the donor alive for 4 to 5 years, taper relief will be 40%, and it will be 60% and 80% according to the lifespan after making the transfer. Okay, so it will be the taper relief chart. And here, 26 February 2018, he was made the transfer. And 2019, it will be 1 year. 2019 Feb, 1 year. 20, 21, 23. Okay, when it comes to 26 February 2023, he's completing 4 years and not completed 5 years. Okay, so he's after making this transfer, he was alive for 4 to 5 years. Between 4 to 5 years after making this transfer, he was alive. So he'll get 40% of taper relief on the death. Okay, so the answer will be 40%. Okay, and here also they are tested the due date. Okay, it's 5 to 6. 1 second. Let us check. 18, 19, 20, 21, 22. 20, sorry, it's 5 to 6. Yes, right. It was my mistake. It is 5 to 6. Okay, there's a mistake in my count. Okay, 2000 and comes to 2019, it will be 1 year. 19, 20, 21, 22, 23. 5 years, correct. Okay, it will be 5 years, 5 to 6 years. So 60% is the taper relief percentage they will get on the death. And here we are also required to find out what is the due date. On the death, there will be arising some additional tax liability. And what is the due date? Okay, so the due date of IHT on death, at the time of death, there will be lots of IHTs will arise. Okay, on the death of a taxpayer, a person, there will be lots of IHT will arise. Okay, so every taxes arising on the death should pay within 6 months. Okay, within 6 months from the end of the month of death. Okay, here the donor was died on 1st March 2023. Okay, died on 1st March. Okay, so even if a person died in the first day of the month, we'll only count the due date from the end of that month. Okay, here this person is died on 1st March. When he's died in 1st March, we'll count the 6 months from the end of the month. Okay, so from 31st March 2023, we'll count. Okay, so April, when it comes to 30th April, it will be 1 month. April, May, June, July, August, September. So it will be 30th September. Okay, on which month the donor was died, take the end of the month, and from that month end to 6 months, that will be the due date of IHT on death. Okay, so we can count the 6 months from the end of the month, 31st of the March, and we will get 30th September 2023. It will be the due date. Okay, so 30th September 2023, percentage. It will answer will be option A. Okay. So let us move to the next question. Next requirement. What amount of the cash gift made by Lebna to his friends during October 2022 is covered by the small gift exemption? We know that small gift exemption limit is £250 per person per tax year. That is the limit of small gift exemption, £250 per person per tax year. Okay, here actually Lebna had made some transfers to his friends. Okay, so look here, the last portion of the question. Lebna made a cash gift of 85, 225, 190, and 490 to various friends during October 2022. So actually, this transfer was made in 2022-23 tax year. And the gift of 85 and 190 were to the same friends. Okay, 85 and 190. Okay, these two gifts are given to same friend. Okay, so the limit is crossed. 85 plus 190, adding together, it will be 250 plus. Okay, so it will not covered under the small gift exemption. Okay, only 225 gift is covered under the small gift exemption. Okay, so here actually we are required to find out which of these transfers covered by the small gift exemption. Okay, 85 and 190 will not cover. 225 is only covered under the small gift exemption. So the answer will be option C. Yes, 225. That will be the answer. Okay, so you can expect questions from IHT in the section C also. Okay, it is not confirmed. Any areas will be tested for 10 marks in the section C, but based on the recent trend in the taxation exam, the more students are tested with IHT, and of course you will have two questions from income tax and corporation tax. One question from income tax and one question from corporation tax. Apart from that 15-mark question, there will be a 10-mark question in the section C. In the recent exam trend shows that most of the students are tested with tax planning and IHT questions. IHT and tax planning are tested most in the recent exams. Okay, so you can expect questions from IHT in the section C also. Okay, so it is not confirmed. I just show you that the trend. Okay, so you should also practice the section C questions from IHT also. Okay, and then do you have any doubts related with IHT? Any doubts? Any doubts from any topics or questions? No, everything is clear, right? Okay, so we have, it's only 6:30, so we can do one more question from IHT. Yes, here we have clear. Okay, good. So we can do one more question from IHT. Do you have any suggestions again? If you don't have any suggestions, we can select a random question. Question, ഏത് question ആയിരുന്നു? അത് ഞാൻ അയച്ചു തരാം കേട്ടോ, ഞാൻ സോൾവ് ചെയ്തിട്ട് അയച്ചു തരാം. ഓക്കെ, ഓക്കെ. അപ്പൊ ഇതിൽ നിങ്ങൾക്ക് സജഷൻസ് ഒന്നും ഇല്ലെങ്കിൽ റാൻഡംലി ഏതെങ്കിലും ഒരു ക്വസ്റ്റ്യൻ എടുക്കട്ടെ ഞാൻ. Okay, if you don't have any suggestions, I'll pick any questions randomly.
അതൊരു സെക്ഷൻസ് ചെയ്യാം.
Oh, of course, section C എന്നാൽ ഏതെങ്കിലും ഒരു ക്വസ്റ്റ്യൻ പറഞ്ഞോ. സെക്ഷൻ സിയിൽ ഇച്ചിരി അഡ്ജസ്റ്റ്മെന്റ്സ് വരുന്നു.
മാർക്കസ് ചെയ്യും.
Oh, of course. So let us,
അഡ്ജസ്റ്റ്മെന്റ് ഉള്ള ഒരെണ്ണം നോക്കാം.
yes, നമുക്ക് സെക്ഷൻ സിയിലെ മാർക്കസ് 220 ചെയ്യാം. Yes, 220. മാർക്കസിൽ അത്യാവശ്യം അഡ്ജസ്റ്റ്മെന്റ് ഉണ്ടെന്ന് എനിക്ക് തോന്നുന്നത്. Okay, so let us try Marcus. It's a section C question. Okay, here we have a question. Okay, the first requirement is okay. Here we have two sections of question. This in the section A, actually we have two requirements. The first one is a general question. Explain whether or not a married couple is treated as a chargeable person for inheritance tax purposes. Is it right or wrong? Sorry, it is not a right or wrong question. Okay, for the purpose of taxation, married couples are treated as a single person or married couples are individually liable to pay tax? Which is right? They are treated as single tax person or they are taxed separately? Yes, good. They are taxed separately. Okay, married couples have lots of exemption in the IHT and CGT. Lots of exemptions are there, and there is no any rules like the married couples will treated as a single tax person. No rules like that. There are lots of exemption. Every transfers between husband and wife, married couples, that will be exempted. Even if it is in CGT, a transfer between couples is completely exempted. Okay, and they will treat it as separate taxable persons. Okay, and look at the second requirement. It is also a general question. State the special inheritance tax measures which are applicable to married couples. Married couples are in the IST tax rules. The whole transfers between married couples are exempted. Even if it is a lifetime transfer, death time transfer, death estate transfer, every transfers between the married couples are exempted. Okay, that is the first measure. And the second thing, they can transfer the nil rate bands, normal nil rate band and lifetime nil rate band. Nil rate bands they can transfer in between. Okay, on the death of first transfer, first partner's death,
Online.
if there are any unused nil rate band, that can transfer to the living partner. Okay, these are the two measures we can use in the IST. These are the additional tax rules for married couples in IST. Okay, that is the answer of first two requirements in the section A. Okay, not section A, in the part of the section A of this question part. Okay. So these two was a general question. So in the next requirement, in the section B of this question, the requirement is calculate the inheritance tax which will be payable as a result of Marcus' death. Okay, we are required to find out the inheritance tax computation. And here they are mentioned, we can ignore the inheritance tax annual exemption. Okay, all the figures are net of annual exemption. So we don't need to consider the annual exemption here. Okay, so when we are required to find out the IHT liability on death of a particular person, we should compute the lifetime tax also. It will be more easier. Okay, so for the better explanation, and actually here we are only required to find out the tax on the death. And for the better explanation, we are going to find out the lifetime taxes also. Okay, so first we are going to find out the lifetime taxes. Is there any lifetime taxes arising related with this person? Let us check that. So Marcus died on 31st December 2022. He had made the following gifts during his lifetime. The first transfer was made on 14th January 2011. So the first transfer he was made 14th January 2011. 14th Jan 2011. Marcus made a CLT. It was a CLT 315,000 chargeable lifetime transfer. 315,000 was made in 14th Jan to a trust. The trustees paid the lifetime inheritance tax of 600, which arose in respect of this gift. So at the time of transfer, there are some taxes are arising, and the trustees paid the tax. Okay, on making the CLT, there are two alternatives. The donor can pay the tax, otherwise the trustees can pay the tax. Here, the trustees are the beneficiaries actually, and here trustees are paying the tax. Okay, so here we don't need to find out any, we don't need to make any computations over here, because they are already mentioned in the question. They are paying the tax of 600 on the transfer of this 315,000 CLT. Okay, so IST arising on this transfer was 600. Okay. And the next transfer was on 3rd December 2017. Next one is on 3rd December 2017. Third December 2017. Actually, this transfer made to Marcus made a, again he made a CLT. Okay, in 2017, Marcus made a chargeable lifetime transfer of 395 to another trust. In addition to this gift, Marcus paid the related lifetime inheritance tax of 96,250 on this gift. Okay, so here also we don't need to find out the lifetime tax. They are directly given the lifetime tax. Okay, so our workouts is so less. So at the time of CLT, at the time of making the CLT, if the donor paying any lifetime taxes, that much amount, the tax element will add with the chargeable transfer. Okay, because the trust, we should find out the grossed up value. Okay, at the time of making this transfer, CLT in lifetime, if the donor paying the tax, what is the amount donor paid as the tax, that much amount will add with the chargeable amount of that transfer. Okay, so because that trust is getting more benefit, trust is getting the asset, and trustee is not paying any tax. Trustee is getting two benefits. They are getting the assets and they are getting the tax benefits, because tax benefits, which means they are not paying the tax, donor is paying the tax. So what is the amount donor is paying as tax at the time of making the CLT, that much amount we will add with the chargeable transfer. So in 2017, actually, the assets value was 395,000. It was also a CLT. Amount was 395,000. And the IST paid by the donor is 96,250. 96,250. So the gross transfer is, gross amount of this transfer was 491,250. Okay, so after making this transfer, if the donor dies within 7 years from the date of transfer, this will be chargeable again, and it will be taxed at 491,250. On gross amount, we will compute the tax on death. Okay, so we just find out the gross transfer amount on this. And let us move to the next transfer. And after this, on 1st Jan 2018, Marcus made a gift of 30,000 ordinary shares in Scarum Limited, an unquoted investment company, to his daughter. Okay, so the next transfer is 1st January 2018. 1st Jan 2018, and it was a pet. Okay, this gift is transferred to his daughter. Okay, and the value of the transfer we need to find out. Okay, here actually Marcus transferring 30,000 ordinary shares. Okay, actually transfer 30,000 shares. And before the transfer, Marcus owned of Scarum Limited issue share capital of, okay, all of the shares before making the transfer, 100,000 shares owned by Marcus. Okay, so before transfer, he was hold 100,000 shares, 30,000 shares he was gifted to his daughter, and the remaining shares he is holding 70,000. So the percentage is 100,000 and 70,000. That are the shares before and after making the gift. Okay, so if a person holding 100% shares in that company, each share have a value of 12 pounds. Okay, so before transfer, its value is 12. So 12 into 1 lakh, 1.2 million will be the value before making the transfer. After making the transfer, he is only holding 70%. So if a person holding 70%, per share value is 9 pounds. Okay, it will be 9 pounds. So 9 into 70,000. So 6,30,000. Okay, so the value transferred will be the difference of these two figures. 1.2 million minus 630,000. The value transferred, the 30,000 transferred shares value will be 570,000. Okay, so on Jan 2018, he made a pet to his daughter, and the chargeable amount of this transfer is 570,000, and it will be exempted in 2018. At the time of transfer, it will be exempted because it's a lifetime individual to individual transfer, potentially exempt transfer. Okay, it will be completely exempted. Okay, so the nil rate bands is already given from 2010 to 2018. Nil rate band is saying 325,000. Yeah, we can use the annual exemption amount on PET also, but in the note they are mentioned, you should ignore the inheritance tax annual exemption. That's why we are not use the annual exemption. Okay, if it is not stated, we can use the annual exemption. Okay. So, yes. So the chargeable amount is 570. These are the lifetime transfers he had made. So after making all these transfers, he was died. Okay, his death on. So let us find out the additional tax liability on death. Okay, let us discuss the additional tax liability on death. Okay, he died on. Marcus died on 31st December 2022. Death date is 31st December 2022. Okay, so among these three transfers, which transfers will be chargeable on death? Let us find out. So the first transfer, it was made in 2011. So on death, it will be never chargeable again. Okay, it will be exempted because he's died after 7 years from the date of this transfer. And on 3rd December 2017, the second CLT, Second CLT made on 3rd December 2017. So we just find out if the donor dies within 7 years or not from the date of this second transfer. So December 2018, 19, 20, 21, 22. Yes. So here he was died after making this term between 5 to 6 years, right? He was died. He was died between 5 to 6 years after making this second transfer. Okay, so the second transfer will be chargeable on the death of the donor. Okay, because he is died within 6 years, within 7 years from the date of transfer. And he was died between 5 to 6 years. He was alive for more than 5 years after making the transfer, and he's not completed the 6 year. So here, actually, this 491,250 is the chargeable amount. Okay, the gross amount will be chargeable on death. Okay, we already find out the gross amount. And in the computation on death, we can deduct the nil rate band. Okay, so we will deduct the nil rate band over here. Okay, actually, what is the nil rate band available at the time of transfer? The same nil rate band will be available on the death also. Okay, actually, this transfer was made in 3rd December 2017. And on 3rd December 2017, the available nil rate band actually for the lifetime, in the lifetime transfers, nil rate band is 325,000 for 7 years. So at the time of making every transfers, we'll check if there was any transfers made in the last 7 years. Actually, from this 2000, when we are counting 7 years back from 3rd December 2017, there was a transfer in 2011. Okay, so here and in 2011 they had made a transfer of 315,000. So in the previous 7 years from this date, there was a used nil rate band of there was a chargeable transfer of 350. So on this transfer in 2017, the available nil rate band will be 325,000 is the maximum available nil rate band, and there was a transfer in the previous 7 years of 315,000. So the available nil rate band was 10,000 in December 2017 at the time of making this transfer. Okay, so the same amount of available nil rate band in the lifetime they can use on the death also. Okay, so on the death, this transfer will chargeable again, and they can use the nil rate band of 10,000 on the death also. Okay, so after making the nil rate band, the chargeable amount will be reduced to 481,250. Okay, so we will compute the IHT liability on this at 40%. Death rate is 40%. Okay, so we can find out 421,250 into 40%. Okay, the IHT liability arising on the death is 1,92,500. And from this amount, we can deduct two things. The first one is taper relief, because he was alive for between 5 to 6 years after making the transfer. So if he's alive for 5 to 6 years, he can use 60% taper relief. That was we already discussed earlier. Okay, so he'll get 60% taper relief on the liability. Okay, so 192,500 was the liability, and it will be reduced by 60% taper relief. And after making the taper relief, he will be liable to pay 77,000. And he can also deduct IHT already paid. Okay, at the time of transferring, okay, 1 second. 10th, guys, 1 second. We need a clarification over here. 10,000 is already utilized in December 17. That's right. Actually, at the time of death of a taxpayer, actually we are recalculating the computations. Okay, here we just made a computation in the lifetime here in the left side of the Excel sheet, and at the time of death, what are the transfers happens within within 7 years prior to the death. All that calculations will be recalculated on death. Okay, the same thing, the same chargeable amount will be recalculated on death of the taxpayer. Actually, we are making a recalculation over here. Okay, so at the lifetime, the available nil rate band was 10,000, and on the death, the same thing is recalculating. So we can use the same nil rate band. Okay, the chargeable amount at the time of transfer, we just find out the chargeable amount, gross amount will be 491,250. On the death of the donor, the same transfer will be recalculated on the death of the donor, and the chargeable amount will be 491,250, and the nil rate band, all other things will be similar. What was available, what was the reliefs, and what was the exemptions available in the lifetime, the same things we can use at the time of death computation. Actually, it's a recalculation. Okay, at the time of transfer, we made this computation. This much we actually tax paid by the trust, tax paid by the donor is given in the question. Okay, otherwise we can just make sure that this answer is correct. Okay, just we are going to make sure this answer is correct. Actually here 395,000 was the transfer amount, that was the chargeable amount, and at the time of making this transfer, we should find out what is the available nil rate band on 3rd December 2017. To finding out the available nil rate band, we will take the 7 years back, and we will find out if there is any chargeable transfers. When we are taking 7 years from back from 2017, there was a transfer in 2011, and the chargeable value was 315,000. So here they will get a nil rate band of 325,000 is the maximum, and in the previous 7 years there was a chargeable amount of 315,000, and the available nil rate band is 10,000. So at the time of transfer, the available nil rate band is 10,000, and 395,000 will be reduced to 385,000, and here donor is paying the tax. Okay, donor paying the tax. In the lifetime, if the donor paying the tax rate will be 25%. Okay, if donee is paying the tax, if the trust is paying the tax rate will be 20. If the donor is paying the tax rate will be 25%. So here 385,000 is the chargeable amount, and the tax rate is 25%, and the tax paid by the donor is 96,250. Okay, and the result is directly given in the question, 96,250. This is how we actually making the computation in the lifetime. Okay, in this question actually we are not need to calculate that. And on the death of that donor, actually this death was happened within 7 years from the date of transfer. So here we need to find out additional tax liability on death. So the chargeable amount will be 491,250, and the available nil rate band will be, what was the nil rate band available in the time of transfer? The same will be available on the death also. Okay, that's why here on the death also we are using the 10,000. Okay, is it clear now? Okay, fine. Okay, so now we can deduct IHT already paid in the lifetime. At the time of transfer, they have paid some amount as IHT, and the lifetime IHT was 96,250. Okay, so at the time of deducting the IHT already paid, actually we are getting a negative amount. In the IHT, as per the HMRC's tax rule, IHT never going to be refund. Never we'll get a refund from IHT. Okay, so it will be the tax liability on this transfer will be reduced to 0. Okay, IHT never gone to a negative amount. Okay, so it will be the first computation we should made based on this first transfer. Okay, and the third transfer in the lifetime, there was a one more transfer on 1st Jan 2018. It was a pet, and the transfer value is 570,000. We already found that 570,000 is the transfer value, and this transfer also chargeable on death. Okay, and it was pet at the time of transfer, it was a pet, so there is no tax liability in the lifetime. And after making that transfer, within 7 year donor was died. So here the nil rate band is not available. Okay, because at the time of transfer, at the time of making this pet, there was no any nil rate band available. Okay, what was the nil rate band available on the transfer time? At the time of transfer, what was the available nil rate band? The same will be available on the death. Okay, and this transfer was made in 2018. Very previous year, in 2017, there was a chargeable transfer of 395,000. Okay, within 7 years prior to this transfer, there was a chargeable transfer more than 325,000. So on this transfer, they will never get a nil rate band. Okay, so on the death also, the nil rate band will be 0. Okay, it will be a 0. And the whole amount is chargeable, 570,000. Okay, and the IHT liability will be 570,000 into 40%. Death rate is 40%, and it will be 228,000. And here we can check for the taper relief. Okay, actually this transfer was made in 1st Jan 2018. Okay, so here actually his a guy is died on 31st December 2020. So 2018 is the transfer year, 1st Jan 2018, 2018, 19, 20, 21, and actually exactly the completion of 5 years he was died. Okay, he's not alive for more than 5 years. Exactly on the completion of 5 years after making the transfer, he was died. Okay, so he's not alive more than 5 years. So we'll consider it under this slab, 4 to 5. Okay, so he will get 40% as taper relief. Okay, 228,000 into 40% will be the taper relief, and 136,800 will be the IHT payable. Okay, it is the IHT payable amount on the transfer made on 1st Jan 2018. Okay, then okay, so he don't have any death estate, right? Okay, look at the last sentence. Under the terms of his will, Marcus left his entire estate to his wife. So he had some death estate, but it is transferred to his wife. So that will covered under the spouse exemption. We don't need to make any further computations. So it is this right side computation we only need in the examination. Okay, if you are doing like this, actually we are here, we use lots of time actually solving this question, because we are practicing. I'm explaining the question, that's why we take this much time. Okay, so in the examination also, you just compute all these left side computations, at least rough. Okay, you just make it as a rough work at least. Okay, while we are connecting with this, we can easily comply with the lifetime transfers and death taxes. Okay, so it is the answer of Marcus. Okay, is it clear, guys?
Sir,
Yes.
level CL2 institute ആണെങ്കിലും നമ്മൾ എണ്ണേണ്ടത് 10,000 എടുക്കാം.
11-ലെ
11 ഇപ്പൊ CLTക്ക് പകരം PAT ആണെങ്കിൽ NRB കുറച്ച് 10,000 എന്നാണ് എടുക്കാം.
അല്ല 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 അതെന്തുകൊണ്ടാന്ന് വെച്ച് കഴിഞ്ഞാല് ഇതിപ്പോ 11-ൽ നടത്തിയത് CLTക്ക് പകരം പെറ്റ് ആയിരുന്നുവെങ്കിൽ പെറ്റ് കംപ്ലീറ്റ്ലി എക്സംപ്റ്റഡ് ആണല്ലോ, ചാർജബിൾ അല്ല. അറ്റ് ദി ടൈം ഓഫ് ട്രാൻസ്ഫർ പെറ്റ് ചാർജബിൾ അല്ല. പെറ്റ് ചാർജബിൾ ആവുന്നത് എപ്പോഴാ? ആഫ്റ്റർ മേക്കിംഗ് ദി ട്രാൻസ്ഫർ, ഇഫ് ദി ഡോണർ ഡൈസ് വിത്തിൻ 7 years, പെറ്റ് വിൽ ബി ചാർജബിൾ. Okay, at the time of transfer, pet is always exempted. If this transfer was a pet, it is not a chargeable amount on transfer. And this transfer is no need to use any nil rate band because it's a pet. And so on 2017, at the time of making this second CLT, they can use the maximum 325,000 nil rate band they can use, because there was no any transfers in the previous 7 years. There was a transfer, but that was a pet. So on 2017, they can use maximum nil rate band 325,000 they can use. And the donor was died only on 31st December 2022. Okay, and he's died on 2022. When you take previous year prior to make from this date of death, this 2011 is actually more than 7 years back. So this 315,000 is always exempted. At the time of transfer is exempted, and on the death of the donor, this day is more than 7 years prior to the death. So this 315,000 entirely exempted. Okay, so at the time of transfer, this second CLT can use the maximum nil rate band 325,000. On the death also, they can use the maximum 325,000 nil rate band they can use. Okay, set ayo. Okay, yes. Okay, guys, I think these are the Marcus is one of the confusing question in the section C, I think. Okay, I'll suggest one more question. Okay, if you're not completed or done with these questions, you just try these questions also. This Afia 212, it's a good question. Lebna and Lulu, we already done with that. Then 214, it's a good one. Adana. Then James in section C, James, it's a good one. And 218, Kendra Older. Okay, at least you should do these questions. Okay. So do you have any other doubts related with IHT? Any further doubts? Okay. Okay, guys, done. Okay. So tomorrow, if you have still, do you have any doubts regarding IHT or VAT? You can ask, clarify your doubts on the coming sessions also. Okay, and tomorrow we'll focus on CGT and corporation tax. These are the two topics we'll cover tomorrow. Okay, corporation tax and CGT, and we will discuss the income tax in the day after tomorrow. Okay. Okay, guys, so prepare well, and if you have any doubts, you can clarify in the live session. Otherwise, you can contact me through WhatsApp. Okay. So guys, bye-bye. See you.